Hello and welcome to traders and investors. I'm glad to present you the daily market review prepared by experts and analysts of fx.co portal. Here we go. Here is January 11 and we're starting from the euro-dollar pair. But first, let's discuss the yesterday's Jerome Powell speech with Jakub Novak. Fed Chairman Jerome Powell asked politicians to avoid interfering with the central bank, stressing it should be free from any influence as long as it struggles with persistently high inflation. He explained that stabilizing prices requires tough decisions that can be politically unpopular. Price stability is the backbone of the healthy economy and over time brings immeasurable benefits to the population, Powell said. But restoring it when the inflation is high may require measures that are unpopular in the short term as we raise interest rates to slow the economy. The lack of the direct political control over our decisions allows us to take the necessary measures without regard to short-term political factors, he added. Markets surprisingly took these statements calmly, perhaps because they did not provide any direct indication of where the Fed's policy was heading. Nevertheless, further increases are expected this year. Powell has recently encountered strong opposition and criticism of his actions from both parties. Most recently, Senator Elizabeth Warren of Massachusetts criticized the observed round of rate hikes, while President Joe Biden largely refrained from commenting on the Fed's actions, noting that the central bank is primarily responsible for fighting inflation. Although Powell repeatedly stated that political factors have not influenced his action, it's clear that the pressure on the central bank is high as more and more politicians are talking about a return to a softer approach amid the first signs of slowing inflationary pressures. With regards to the forex market, EUR USD still has a chance of updating the December highs, but for this to happen, the pair has to break above 1.0760, as only that will push the quote to 1.0790 and 1.0850. Meanwhile, a drop below 1.0720 will bring the pair to 1.0680 or to 1.0650. For long positions, you can buy euro when the quote reaches 1.0763 and take profit at the price of 1.0809. Although there is a chance for growth today, a downward correction could also happen at any moment. Nevertheless, remember that when buying, the MACD line should be above zero or is starting to rise from it. Euro can also be bought at 1.0724. However, the MACD line should be in an oversold area, as only by that will the market reverse to 1.0763 and 1.0809. For short positions, you could sell euro when the quote reaches 1.0724 and take profit at the price of 1.0666. Pressure will return if the attempt to consolidate at the weekly high fails. But take note that when selling, the MACD line should be below zero or is starting to move down from it. Euro can also be sold at 1.0763. However, the MACD line should be in the overbought area, as only by that will the market reverse to 1.0724 and 1.0666. We've got red hot trading signal for gold by Dimitrios Tapas. Early in the European session, gold is trading around 1873. we can see a strong consolidation below the resistance of 1880. Gold is likely to continue trading within a range until inflation data is released on Thursday in the American session. In case gold continues to rise, it should consolidate above 1880, and then it could reach the zone of strong resistance around the psychological level of 1900. It could even reach 18 Mary located at 1906. On the other hand, in case gold consolidates below 88 Mary in the next few hours and falls below 1875, we expect a decline towards the support of 21 SMA located at 1863. This level, where the 21-day moving average is located, could give gold a good technical bounce to resume its bullish cycle, and the instrument could reach the area of 1906. Conversely, in case negative pressure prevails, a strong bearish acceleration is expected to occur below 1860. Then the metal could reach 78 Mary at 1843. And even the bottom of the uptrend channel around 1830. Dimitrios' plan for the next few hours is to wait for the gold to define the trend. In the event that it trades below 1875, it will be a clear signal to sell, with targets at 1860 and 1843. On the contrary, in case the instrument breaks sharply the resistance of 1880, it will be a signal to buy with targets at 1906. The next in line is Lowry Bailey, with trading plan for AUD-USD pair. The Australian dollar was down 22 points on Tuesday. Unfortunately, not clearly correlated with the commodity markets as we had hoped for. Copper was up 1.26% yesterday, while gas was down 6.9%. There was no qualitative price breakout above the resistance at 0.6917, the high on August 1, 2022. Divergence with the Marlin oscillator has already formed, but there's still a risk of its upgrade to a less steep slope. The limit of growth is the target level of 0.7048. This issue will probably be resolved tomorrow with the release of the US inflation report. On the 4-hour chart, the price has settled under 0.6917, but the price is still above the indicator lines. Marlin oscillator is in the growth zone. The price can go above the resistance line without any noticeable difficulties. The first sign of the reversal is when the price crosses the MACD indicator line, going below the 0.6845 mark. That's all for today. See you next time. Good luck.